Hey everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for oil. So the price of oil versus the dollar. Brent Crude, UKOIL. If you want to stay up to date with all of our videos, make sure you click that red subscribe button on the bottom right hand corner of the screen. Alright, so we're looking at a multi-year downtrend for oil. And if we go back, this is just recent, near term, right? This is that peak back in late 2018. We're following that trend line down. We can see successive attempts to form a new high have failed, right? So here's your first high. You have first failure, second, third. This one broke out of the trend, but it really kind of couldn't stay in that zone and really still topped out the same horizontal resistance at $68 per barrel. Then fell down. Recently we had the big gap, right? So we've been talking about a lot how gaps in market price offer great support and resistance. So now you can see my sentiment's bearish. I still think ultimately this price will go back down. We've got a resistance zone here ahead at $45, $250. But let's go ahead. Actually, now I don't think we're going to get much further than 45. Let's go ahead and zoom in on our 4-hour, and I'll tell you what I'm talking about. So here we go. We think about this gap that occurred back in March, meaning where price closed on Friday and where it opened when the markets opened on Monday was a giant gap, meaning that much selling had occurred in off-market hours, just forced the price, this giant gap. So what that means is it usually offers a great place for support and resistance reference as far as when price returns to this gap zone. It's unlikely it'll get much further because it acts as resistance or support. So what we see here is that price has in fact moved into this gap zone, but as you can see, it's having a hard time really making any progress, right? We've seen it capped out at $44 a barrel a couple times now. Now we're kind of flatlining around $43.50. So if price doesn't have enough momentum, what's going to happen is, we can see in the very short term, it looks like it might make a stab here at 45, but my guess is this is where all the selling lies. What needs to happen, we need to see price forced out of this zone, right? Once price goes below $40 a barrel, then we're out of this little gap zone, which is our support and resistance area, if you will, and it's really broken to an equidistant grid, as you can see here. You could put another rectangle on this lower zone, and really the story is the same, and you could color this a different color just to remind you that price is essentially range trading. It's moving up and down in a range with a tight top and bottom, and the only reason I move this line up so much is because it accounts for all the way to this, exactly the drop-off point at the beginning of our gap. So now price moves below $40 a barrel. Then what happens? Then we're going to make a stab at our last known support, which is going to be this significant line here, about $34 a barrel. Why significant? Because price touched once, twice, and then we go back here, and here it was resistance, right? And here you can see it was just kind of a general congestion line. So that just means when price gets here, it pauses and could go the opposite way or just kind of pause. So what could happen, price falls out of this zone, falls down into this zone, range trades again until eventually it gets pushed out. But if we look at this timeline calendar, look at our calendar at the bottom, right? So here's our big descending trend line all the way up here. So if price is bounced around, it could be all the way into the fall before we see that big decline. But if there's a big market shakeup, we'll see price quickly moved out of this zone into the $33 to $40 range. All right, everyone, I hope you have a great week and very profitable trades, and we will talk soon.